Hey guys, and welcome back to Smart Money Minds. People ask, what are the best types of stocks to trade? And my quick answer for that is, it depends. Are you a long-term investor or a trader? And what kind of risk tolerance do you have? Are you an actual day trader or are you short-term swing trading? But I'm not here to not give you the answer. But because regardless, whatever industry you're interested in or what risk tolerance you're looking for, there are three key things that I look for generally that give me the best success rates. And these three things are things that you can look for in a chart. So these are the top three things that I look for in a ticker that signifies that they are the best type of stocks to trade. The first thing that I look for are stocks that are in long-term uptrends. This one is easy. I mean, look at these charts here. You got Shopify, Microsoft, Apple, Google. What do all these stocks have in common? I mean, just take a moment and look at the charts that I've posted here. Look at the weekly and monthly charts. For the last 5 to 10 years, these charts have been in a steady uptrend. So what does that mean if you buy? That means that you're much more likely to be making money than losing money, even if you were just day trading them. For example, in 2019, Shopify had 11 green bars on the monthly and 1 red bar. That means that if you buy on the first day of the month and sold on the last day, you'd be making money 11 out of 12 times in 2019. This is the easiest way to make money if you're buying a stock that is constantly and consistently positive. It really is a no-brainer. For those who say, oh, it's too expensive right now, think of it this way. Was Amazon too expensive when it was at, say, $100, knowing that it would go to $3,000 now? Was Bitcoin too expensive when it was, say, $300, knowing that it hit 10,000 plus? And this is why the trend is your friend. Because would you buy a stock that is $3,000 if you knew that it had a good chance to hit up to $6,000? I mean, I'm not saying that it's 100% guarantee, but given the historical trend, that's a strong likelihood. The second thing I look for are stocks that have bull flags. Bull flags are one of the most successful patterns available for technical analysis. What it is, it's a weak consolidation period after a strong bullish move. If you look at the ticker CAPR, we have a perfect example of a bull flag on the daily time frame between July the 13th and July the 27th. You see strong bull volume on the move up, followed by weak bear momentum down for 2 days. This means that the bears aren't getting strong enough follow through. No one is really wanting to sell, so everyone is just waiting for more buyers to come in. This swings in the bullish favor. And on October the 24th, after it broke the high of 7.04, it was just off to the races for the next 3 days, moving over 100%. Another chart here that I'm going to show you as an example is looking at the smaller time frame for PENN on July the 29th on the 5-minute time frame. So you see strong bull volume at the beginning of the day, followed by weak bear volume on sideways action, giving back very little. Then another wave of bull action comes in around 7:30 and then pushes it to new highs. This is one of the easiest continuation patterns in technical analysis, and it's even easier if the trend on the short term and on the long term is with you. It's like sailing with the winds fully behind you, pushing you at top speed. Remember though, it's not always to say that this pattern is going to be 100% successful every time. So always use your risk management and set up a good stop loss level. The third thing I look for are hype tickers or industries. For example, the marijuana run-up in Canada in October 2018. Marijuana legalization in Canada was a known event that was building up to the legalization date on October the 17th, 2018. And knowing that that was the case, the hype started to go in the end of 2017 and really ramped up in late July, as you see in some of these charts here. These are clearly hype stocks, but because of it, money is pouring in due to speculation. I understand the fact that some people don't like to trade on speculation alone, and they really want solid facts and financial statements to back up a company. However, these aren't companies that you really want to hold on for the long term, so it's perfectly okay to ride the wave up and take your profits before the wave crashes back down again. My example is of a surfer. Is a surfer successful in calm seas? They're only great when the wave is moving hard and they ride it for as long as they can before the wave crashes out. A successful surfer doesn't let the wave hit them when it starts to collapse. Knowing this, it's important to get into these hype stocks and hype markets as soon as you identify them. And you can always take your profits quicker than normal. It's okay not to ride the whole wave, but it's not okay to let the wave take you under when it crashes. We're looking for another wave for marijuana stocks when the US starts to build plans to legalize it as well, and that's just one hype industry building up. The current hype stock industry would be on electric cars like Tesla or NIO, and in COVID-19 vaccination production companies like Moderna. So there's always something going on in the world that will drive different industries up. In the comments below, let me know if you agree or not on these signals for the best trading stocks. And if not, let me know what you look for to give you the best success rates. And if you enjoyed this video, make sure you hit that like button, subscribe to my channel, and we'll see you guys next time for more financial videos.